So, guys, I streamed on my wrong channel this morning. There's just a quick stream of me showing this one trade, but it is what it is. Let me double check that it's correct now. Whilst I delete the live stream because the second one I've done. Is it not? Hello? Hello? What's going on here? Weird. Hello? Okay, that's the correct account. Let's go. Right. So we entered the demo account trade, which I believe is just his stop loss. I'll just show it to you since the other stream just wasn't the right account. So it's a very high risk trade as not everything has been checked off. However, I entered the smaller risk. This is a demo account type of trade, but I'd take to scratch the itch. However, I do not want to set a demo account up, so I'm just risking a small potential. It was just this. Essentially, it was just the London session trade in the morning. We had the 4-hour fair value gap. Price broke some small structure right here, and then that displacement range. We had a fair value gap, which we pulled back to, and then we set the stop loss just below to then target these equal highs over here, which I believe price is going to, but again, it was a high risk trade. We didn't have time on our side, which is very important. You can see it's around 4 a.m. kind of New York time, which is 8 a.m. for the London session. So that's the main reason as to why I entered it. But you can see, unfortunately, I don't have the actual full thing, but our stop loss is below here. It's got wicked twice. So we are currently not in that trade. So New York Open has occurred. So let me start getting ready. The open was around here. Midnight open. Interesting. We had a instant swing to the downside, which guess what lines up with this fair value gap or order block. Fair value gap on the 2-hour time frame. The bottom part of it, what's the 4-hour looking like? Okay, the whole thing's a fair value gap. What about the hourly? There's also a fair value gap from here to here. Anything a smaller time frame? From here to here. I don't think it has it reached that. No. Okay. This as well. So on the daily, we are in a premium. And we have some liquidity here and liquidity here. Now the liquidity up here is the high of today, yesterday, and last week Friday. So it's very, 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 very impactful / strong liquidity. So I think price really wants to go up here. You can see these are the equal highs. So I think this liquidity is going to be a target. Although this liquidity is from kind of equal lows over here, it's not as much, in my opinion, as the one above price. So still going to mark it. Let's zoom in a little bit. So what do we have? So at midnight open, we have, hold on. I did this place, took out this high, price came back down. That's the entry. Yo, no. And I knew this would happen to you. How many pips is it? So to this. Okay, I may need to deposit some cash. Wouldn't mind another entry down here. So the reason why we're bullish against the dollar is because of this. Come up to this area here, we did just create potentially some external liquidity. So we've pushed up, taken this liquidity over here. We've swept that, pushed up to this area, and we accounts for the Judas swing from 830. I believe price wants to go down, which to this liquidity, and then ultimately this liquidity, which is on the daily time frame, and this on hourly. So I think it wants to go through here to get to here. So there's a lot of liquidity that is untapped, and I believe price wants to get to. So also I was not able to really put much. I think I can get in again, just to be kind of quick. Okay, wait 1 second. Okay, so yeah. Wait, no. Enough so I don't get margin calls, right? So we've swept this high with a displacement. In that displacement range, the only thing you can maybe argue is that the entry we got was not in a discount. It was in a premium a little bit. So you probably want to enter here or here, of which the more price goes up, the more this becomes kind of a discount. From this high to this low, this is the midpoint, the equilibrium. We've got our original entry from, even though we're a little bit late. Still a 1 to 5-ish. Okay, deposit went through. Sorry, I meant to walk you through the entry, but the entry was happening way too quick. So the idea is, on the daily, we're heading towards this liquidity over here. We also have the fact that we have swept this liquidity down here, swept some of the liquidity down here. So we swept that. This is a displacement in the hourly frame. This fair value gap right here. We've come up down to this and we rejected it. Not only have we rejected it, we also broke this high with this displacement. If you look from here, okay, we get another entry right here as well, because we've come back down to this area here. Now I'm just thinking, do I scalp it and set below here, which is, we set it around here. 1 second. As a compound. Kind of like, where is it? Got in here. Put in here. Why? Is it this? In the midpoint. I don't like how thick that's looking though. Can I? Blue makes more sense. Did I just post this or no? Yeah, yeah. Sorry. Yeah. It's the line of profitability for me. Below this, we're not in profit. Stop loss at 4 for the first one. And the second one, I think it's still down here. Over the space it's looking at the entry, but I think I'm brave enough to enter that. Yeah. Spreads. 4, 4. Oh, wait. No. Oh, that's the entry gone. I tried to deposit more, but it's what it is. I forgot it's news. Oops. It was actually good for the dollar. Yeah, the dollar's yeah. A 1 hour fair value gap, which is nested into the 4 hour fair value gap. We had the markets to shift on smaller time frames. We got our entries in and we're targeting all the way up here. This line, get rid of that. We'll just take these two entries. Let's look at some low hanging fruit. Okay, well, there is some here. This one looks like it's about to drop. Same thing here on AU. This order block or fair value gap. I think it's an order block. Yeah, it's a 1 hour, 2 hour order block. Came to the upper quadrant of it. That's where we are rejected from. The smaller time frames. The swing highs. One here. There's one here as well. It's bearish order block. Closed above it. The only thing that's not clean would have been the entry. But gee. Okay, so these equal lows right here. In that open. What? In that open right here. How did I? Look at that. And into here. So liquidity, the midnight open over here. drew this thing down. It's not a juice, it's a juice up, then a deliverance down, which flips this liquidity, then 830 right here. Boom, boom. It's here. Session open. Come back down here. This wasn't that clean either, because you would have wanted this happen over here. I took this out. They would come back down anyway. The displacement range. It would have been what I was looking for an entry. And then also, we did sweep liquidity. And we had that market shifting. You could have also technically come here. You'd have had this displacement, of which happened after the sweep, broke structure. Just came back down to it once, twice, the third time where you just set your stop loss below the first contributed candle to the first value gap, which is this low right here. You wouldn't put your low lower than this. I mean, you would have put your low lower than this. So let's say you got your entry worst case, your thingy would have been this lowest. I probably would have gone to 15 pips. Where's the target though? It's part of the issue. Maybe there. That's a bit far. Not clean either. I think this one you just gotta manage the low hanging fruit. The minute open, you have a fair value gap here. We take some out of here. Maybe this is your ultimate target, but just be taking some out on the way. Anyway, for EU, you need to be careful because we want to keep this profitable. And just look for low hanging fruit. So, no displacements. This one's been filled. So, this is the earliest displacement right here. We would be looking to take our first initial profits. So that it would be over here. It's the ultimate target. Set an alert over here. This is the cleanest one. DXY, we want it to start delivering downwards until those liquidity areas. But there hasn't been that much speed and movement with DXY, so you still have to be very careful. Okay, I think we just never just closes. I'm gonna set an alert instead of just looking at the markets. First one, if this comes back to entry. Second one, to the area of which this one. Let me know if it wants to go up. So, whichever one alerts me first. Wait, there's no 3 now. I have two. Why is there three? Yeah, I know there's three is the limit. What? Yeah, I'm being trolled. Okay, there's three. Okay, so finally it shows me at least. Why is there three? It's levels. 685. 684. Okay, they round to each other. Just take out one. You know if this comes back up here. Or trust analysis, this is what we think will happen. It's been open. We swept this to get up here, which swept these highs, tagged in this fair value gap, then push to the downside and target this sell side liquidity. After we take buy side, we aim for sell side, generally speaking, which will line up with this, and then our overall target, which we've had since last week over here. So this could be the trades that set us up. Financial breakthrough, financial freedom. So I'd like to know if it will trace his back. I think we're good. And then, of course, over here, this is the best low hanging fruit for me, in my opinion. That's why I've set the alert near there. And when I get to this point in trading, I just close the charts. My alerts on my phone. Make sure I'm not muted. And for the next hour, it's time to add some of that sensitive information. Stuff we haven't done in a while, which is study. Need to find the how many times open. 3 to 4 will eat, and then 4 to 5 I'm going to study. But I'll probably end stream 3 because that's the time I can eat from. Okay. Sorry, I'm just trying to find. Okay, I don't think it's open, even though I literally remember it being open. Okay, I found it. Okay. So we're partially through episode 32. No, why have we finished 32? I think we have. Memory we're about here. So this is when you have an inside day. Oh, wait. What is it again? An outside day. Wait. I think it's outside day. Yeah, an outside day is when it counts. Yeah, so it's outside day looking at the price action the following day.
To trade in those types of ranges because they can come back on you, stop you out, and just go nowhere for a long period of time. So if you know what you're looking for in terms of what the algorithm's going to do, and the algorithm on days like this is called a consolidation day. And what happens is this: the market starts trading, creates an initial range, and then stays in that range until the afternoon. At 3 o'clock, it used to be the bond close that started this whole thing, but now it's just 3 o'clock to 4 o'clock when equities close the closing bell. That sets the tone for on close orders. So what that means is, what was going on prior to 3 o'clock? The market was rallying up. What did it go up for? The buy side liquidity. But traders don't look at that as a breakout to go higher, and they're going to pair that with the market participants that are considered smart money. So that's exactly what I outlined. This is exactly what transpired. Everybody in the Twitter feed were following along. I mean, granted, there was a few people, and you can go through and see who they were. They weren't really paying attention because they came into the conversation late, and I went a long day today just tweeting. What you don't know is I had my son sitting next to me, and I'm outlining things to him, and I'm explaining what should take place rather in the marketplace. Plus, I'm also sending out tweets. So my mind was divided between all of that. So it was very difficult not only to predict what you all were thinking and thinking about what should be transpiring in price action, plus literally walking through with my son what to anticipate, expect, and see in price action through his lens. He was actually executing in a live account. He has his AMP account linked right through TradingView, so you can trade directly right from the chart. So he's plugged away on my laptop right next to me, and his account was able to grow from $6,000 at the beginning of the week. Now it's at $10,000. That's real money. That's live money. And when I hear about people that say the stuff I teach doesn't work, or if I can't call the market, and when people sit there and they spend the entire day with me, and I outline everything, and I outline this very specific trade here way before it even forms, before the market even went up there, I'm explaining all that. They went right to where I said I was going to go, run the stops, then sink it back down the middle range. Go back and look at the tweets. I can't edit them, and I'm not deleting anything. Okay, so if I make a mistake, a spelling error, you just have to deal with it because I don't want any deleted tweets. Zero. So if you'd like to follow me and all that stuff, just save everything. A signal stage for all this back and forth motion that they're going to try to hire to squeeze out traders that were already short from the previous day and trade their stop loss right above the old high back here. They bumped it here on a very shallow run. Let me take this off. They bumped it on the. Let me take everything off actually. These relative equal highs, as it dropped down, they trailed their stop loss, those that are short. So they ran up and bumped it on a shallow basis, and then one more time they ran up in there, cleared them out real nice. So the logic I was teaching was that would be utilized for smart money at the close between 3 o'clock and 4 o'clock. So they ran it up there.
Pull back on Euro USD. I'll be real. I don't know if I'm confident this is going up or down, sorry. Why? Like, what is this? Oh my god. It always delivers at the times when nobody's trading. If I deliver it here cleanly. Okay, let's have a look. Right. Of all these equal lows right here. So many. Up here we have this high, and we do have this imbalance, which is closer to price. We are in a premium, and we've just taken liquidity. I'm holding. Go trust the trade. Go trust the trade. That being said, am I crazy enough to add more to the position? Look at the power 3. Opens, come back down, so this, and then I'm expecting a big delivery up. Let's see, man. I got 3 entries on this. 1, 2, 3. I'm back in my analysis of the daily bias that this is going down. Despite the only thing I'm concerned is that there's equal highs here, and then above those equal highs is an imbalance, which is close to the price. But there's also equal lows here, and then there's the ultimate goal down here. So back in that idea again. We're also accounting kind of this move as the manipulation, but it's such a choppy day that I wouldn't be surprised either or. I'm just more biased to the bearish side of things. We failed the bearishness multiple times, and the structure on a specific pair is also lining up for what I believe. So that's my reasoning for this. Back in it. Continue.
All the buy orders that were resting above here are here in the form of protecting short stops, or not short stops, short positions, acting as their stop loss order. When the market trades above that, those buy stops that are protective in nature, they become a rushing liquidity wave, okay, of willing buyers in the market. So willing buyers to market at 3 o'clock on a day like this where it's consolidated, it's going to want to go back to the middle of the range. And that's why I posted and tweeted, study the middle of the range of today's range. Okay. So when you look at that type of event, it's going to range bound trade between, here's the 930 or so right there. Okay. So the low of the day there and the high of the day there. So split that in the middle. There's your midpoint, and it's going to want to gravitate back to that. So when you look at price action days like this, and if you're caught up in it, you know what you're doing, or you feel like it's just being chopped up, wait until 3 o'clock. Because many times at 3 o'clock to 4, the algorithm will do something that goes outside the bounds of the daily range like it did here. Okay, trades up into it and then rams it down, and nobody's really allowed to make any money. Anyone that was long breaking out here gets right across coals. Anyone that's short gets knocked out with stop loss and a losing position. And most of the time, traders are too afraid to go in here going short. Where people that like myself I outlined today in front of 20,000 people, they all seen it, they all watched me call it, and there it is. There's my fill. There's the middle range partial, and I got 2 in flip. And just for the sake of completeness, I'm just gonna take one of them off while I'm doing this recording, so I don't have to worry about it at all. You can go to my stop and or go to my limit. Either one's fine by me. I don't care. Okay. So I'm going to try to do a little bit of tomorrow's session. I'm not going to spend the entire day, obviously, because I have other things I take care of, but I've scheduled in today because I had to work with my son and his analysis and learning all that stuff. So I was very proud to see him pushing the button on his account. He did very, very well. Had 1 or 2 hairy moments where he wasn't thinking like I was hoping he'd be thinking, and had a losing trade. Was able to recoup that and push his account to over $10,000. So I'm very proud to see him engaging and doing his own thing and trying to figure out this stuff on his own. So yeah, I think we'll talk a little bit through that Twitter application tomorrow. I don't know how long I'll go, but we'll see what we get from that. And I think that's going to be it for this one. Until I'll talk to you next time. Be safe.
Good.
All right, folks, welcome back. This is our final meeting for the week, and this completes my daily review for the 2022 ICT free mentorship on YouTube series. All right, so we finally made a run below that May 12th, 2022 low here. And I want to take your attention into the hourly chart. All right, so here's the trading day for Friday, and we'll look at this when we get to it. All right, so we've consolidated, market ran up, took a stop on my final balance on that paper trade. We moved up into a deeper fair value gap, creating the high of the day. We broke down below the 39.15 and a quarter level. Now, for me, this was the turning point that I required. I didn't want to do anything prior to this run here. I did a commentary on the Twitter Spaces portion of their service or whatever, where you basically get to hear someone talking, and just all done for a little while. Around 8:30 to 10 o'clock, I spent about 90 minutes just covering a lot of different things, from psychological things to personal things and trading, and how my children are, with the exception of one, not really interested in trading, but now I have one of my sons that are actively pursuing. And now, obviously, he's given me permission to show you his account here. It's a live account. Here you go. You can see he got his account up today. Here. So previous balance, I was showing you earlier. I showed you a little clip on Twitter. Previous balance after commissions, he had $9,751.66, and today he added another $3,700 to it. Brings balance to $13,451.66. That would essentially be in 3 weeks, like 300% return, or number 1 spot on the Robin's leaderboard in less than a month. Now, obviously, AMP allows you to trade with an amount of leverage that is exceedingly lower than that of what Robin's would do. That kind of return, obviously, is not typical. Okay, I'm not promising any of you that you're going to get that. And yes, he's my son, so he has a lot of experience sitting next to him. So when we're looking at charts together, I'm kind of like leaning on my experience and asking him what he sees. Basically, what I'm doing with you all when I'm training you. Okay, I'll prompt you. I'll say, what do you see here? And what do you see there? So that way, kind of, it builds his understanding as the charts are painting. And he gets to push the buttons on his own, deciding whether he wants to get in or get out. And there it is. And today, I was utilizing that swing low there. So I wanted to see that break. So during the time on Twitter, I wasn't really interested in anything until that low was taken out. And you can hear that in the discussion. I wanted to see this low break. I was giving it an opportunity to see if it was going to show a willingness to come up here and run these highs. That could have very well happened, hit that, and then did all this business here. But it just so happens that it breaks the 39.15 and a quarter level here. And then right in there, I'll explain how I personally would have been involved and how I actually was talking to my son about it. And these types of ideas helped him propel his account today. The market trades below the short-term low here, took some sell side out there, and then ultimately taking out the 30.55 level rather handsomely. And we'll look at all this business when we drop down the time frames. Let's look at 15-minute time frame. All right, so here's that fair value gap it worked up into. I wasn't interested in all this business back and forth, chopping around. Finally, with the
I think we close this kind of losses, which actually isn't that much. Coming out. DXY's going up. Sure.
39.15 in a quarter level. It broke through it, and then we had a gap in here, which we'll see in the lower time frames. That was, in my opinion, the better trade. Now, some of you are going to look at this and say, well, it didn't go to a premium. I'm teaching you how to find the highest probability and also trusting the model. I'm not limited to just one model. Okay, so I kind of want to preface it by saying that I don't want you thinking that I'm just this one-trick pony, that I can only do what I'm taught in this model. I know some of you want me to sit down every single day and give you the example of that model, but to do that, that takes away that discovery for you. Like, you got to go into your charts and find them. And then by building a backlog of old data showing those types of moves, it helps, obviously, with your confidence. It builds your own pattern recognition. And it's just, this is the way you are supposed to do it, period. I'm not going to do it for you. I'm not going to hold your hand for you. I've taught you what it looks like and how to find it, where it forms, so that way you go through it and you look for it to form in your own charts and collect the examples of it. That's backtesting. So anyway, it runs through 30, 72 and a quarter, creates another opportunity. You can actually see the fair value gap there. Trade up, that's another short. Worked lower, finally creating the short-term low. And at 1:30, that's when we start watching the afternoon PM session. It rallies up, creates short-term high in here, fair value gap. The last hour of trading, rise back up into a fair value gap here. So if you look at the range from here to here, it goes back to a premium. I taught you that. So that's a target. This imbalance, fair value gap, reversal on Friday's trading up into an own imbalance there. Okay, so my son participated in shorts in here. He took 2 shorts and went long in here all throughout this, and was able to, again, push his account up $3,700 today. If we go into a 5-minute chart, here is that same idea where it went created the low, 1:30, it starts doing its business. What's it reaching for? Going to go back into the middle of the range, into a premium. This is the array above, half the move from here to here is 50% equilibrium, and this is the premium level. So it goes down, small little drop down in here, into the fair value gap after 3 o'clock, and then the market starts sending it into an algorithmic spool where all this price action starts running aggressively into the close, up into a completely random level that was shown on the hourly chart. And here we have the market trading right into the area, and this consolidating going into the close. So now, the idea of looking for a setup, and let's go into this little area right in here. Here's that fair value gap. There, it rises up into it, there, and then breaks lower. And here, there's a fair value gap. It trades up into it there and sells off. Notice that it's occurring at the levels that I have here on the chart. Those old lows where sell side would be resting. So we're using the fair value gap after a run below on the lower. See, like support broken, return back into the fair value gap. Listen folks, not go back to the old low broken and act as resistance. Okay, that's not how I look at it. If the fair value gap doesn't exist, I don't trust that level as an old support broken to resistance. That's why I try to tell everybody that comes to me, oh, he's just trading break and retest, or he's trading support and resistance. I'm not, because I classify specific levels beforehand, looking at them with the logic that the market's going to create these patterns around them. Same thing here, old low, the fair value gap, it trades up into it. Why didn't it just stop at the 30, 72 and a quarter level? Because it's going into the imbalance here, then the was going lower. So the 2 shorts were in here and here, the longs were in here, and then riding up into the imbalance. Okay, and it's real hard to beat a live account proving it, and it's all the better when it's your own son pushing the buttons and seeing it happen. So that's a really good feeling as a dad. So hopefully, with what I shared this week, I gave a lot of content, and today I just wanted you to understand what it was and why I was not willing to take a trade yet. Because I wanted this level, the 39.15 and a quarter level, to be broken. I wanted that to happen first, and to do that, because on the 15-minute time frame, that gives me that break. Whereas all up here, it's consolidated. I don't want to catch a break below a short-term low and then run out to equal highs. Notice that? That's the reason why I'm picking that. Because I know you're all asking, well, why didn't you use any of these short-term lows being broken? You could have, if you want to be ultra aggressive. I wasn't going to be ultra aggressive because we have a lot of volatility in these markets right now. So I want to know that I know. So this short-term low, that's why I haven't noted. I told you about it in the commentary today, listening to me on Twitter. Breaking through. You don't see the gap here on the 15-minute time frame, but it's appearing on the 5-minute chart. And that's what my son employed as his trade. And then down in here, there was another trade. And down in here, there was another trade. And here's a trade. So the key levels that I note, they're not just indiscriminate levels. They're levels that are built on the logic. And it's based on liquidity, not support and resistance. It's liquidity. The orders I know are going to be there based on the logic that the market's likely to do what? It's going to reach for that 38.55 level only if we break below here and then we have a fair value gap. And then we break this level here and does it get another fair value gap? Yes. And then delivers even more. So it's a matter of all these things coming together as a confluence, not just one thing leading to, that's the conclusion, that's the exercising of the pushing of the button. It requires a lot more things. And that's kind of like what I was helping you with yesterday, and hopefully this morning I was successful at least. I was hoping I was successful. Some of you are really coming back with feedback on Twitter saying it was helpful and you've seen it. Some of you actually took trades. Some of you actually did demo and paper trades, and you see it. You actually participated in it. But when I said this morning when I was closing the presentation on Twitter where I was audibly heard, you can't see my chart, I was kind of discussing things in certain levels. What I was saying was I don't have a setup yet. It's sloppy. And what it was doing is all of this in here. Okay, so as we got to the 10 o'clock hour, I told you I wanted to be off there at 10 o'clock because I'm anticipating the algorithm taking that low out, and it does, and then it creates the pattern I taught you, which is the fair value gap. We have the displacement, and I want to see it take off. Now, if you look at this displacement leg here, you're going to want to measure that and say, okay, it didn't go to a what? Premium. I don't expect it to go to a premium here. It's going to be a hurry to do what? Get down below that 38.55 level for the week. So let's go one time back into the lower time frame. Let's see the first time on the lower time frame. Scroll back here. Okay, so here is that return into the fair value gap here. So when it does this, I'm looking for it to move quickly away and start gravitating towards the other pool of liquidity down here. If you're looking at it from the relationship of short-term dealing range, this swing high, that swing low, we have a fair value gap here, it trades up into it there, and that level, 39.15 and a quarter. So it's a confluence of several things, but the level itself just highlights where the liquidity would be. The imbalance is what I'm keying off of and what I'm focusing on. So equilibrium or above is what? Premium. That's what this is here. Okay, that's what I'm on the chart. So don't be discouraged or look at it from a perspective that, hey, the market didn't go to a premium. You just don't have the experience to see it yet. You have to do this for a while, folks. It isn't a watch one time and then you know it. Like it takes some effort on your part. But I promise you, if you work at it, you're gonna get it. You're gonna get it, and then once you have it, you can't forget it. It's like riding a bicycle. Okay, so hopefully this has been insightful to you. Hopefully you learned something this week. Hopefully I was able to propel your understanding a little bit beyond what you were thinking was about all you're gonna get from me for 2022. I have obviously some more things I want to share with you, but hopefully you enjoy this week with me. And I'll touch base with you on next Tuesday, Lord willing. Until then, so that way it builds his understanding as the charts are painting, and he gets to push the buttons on his own, deciding whether he wants to get in or get out, and there it is.
We got to go in the lab.
And today, on the Twitter Spaces portion of their service or whatever, where you basically just get to hear someone talking, and that's just all done for a little while. Around 8:30 to 10 o'clock, I spent a million minutes just covering a lot of different things, from psychological things to personal things and trading, and how my children are, with the exception of one, not really interested. And I want to take your attention into below that May 12th, 2022 low. Our final meeting for the week, and this completes my daily review for the 2022 ICT free mentorship on YouTube series. All right, so we finally made a run below that May 12th, 2022 low here. And I want to take your attention into the hourly chart. All right, so here's the trading day for Friday, and we'll look at this when we get to it. All right, so we've consolidated, market ran up, took a stop on my final balance on that paper trade. We moved up into a deeper fair value gap, creating the high of the day. We broke down below the 39.15 and a quarter level. Now, for me, this was the turning point that I required. I didn't want to do anything prior to this run here. I did a commentary on the Twitter Spaces portion of their service or whatever, where you basically just get to hear someone talking, and that's just all done for a little while. Around 8:30 to 10 o'clock, I spent a million minutes just covering a lot of different things, from psychological things to personal things and trading, and how my children are, with the exception of one, not really interested in trading, but now I have one of my sons that are actively pursuing. And now, obviously, he's given me permission to show you his account here. It's a live account. Here you go. You can see he got his account up today. Here. So, previous balance, I was mentioning, showing you earlier. I showed you a little clip on Twitter. Previous balance after commissions.
I'm just gonna watch today. I'm not trying to make notes. I have a lot to write down.
All right, folks, welcome back to this showing off stuff. All right, so today we went through the process of watching and analyzing the opening price on ES, and I mentioned on Twitter that I was interested in this old high back here. And that's largely linked to the fact that we had a gap. When the session started again last night, my local time at 6 o'clock, we got down, and then it just drifted lower. Had a small little rally in here. SMT divergence, I'll show you that in a moment, but in here, we have market creating relative equal highs. It broke down. I gave you the fair value gap live this morning on the live stream, walk you through the whole business of running out the sell side and the opening gap on Sunday, which is over here. So I don't have that on my chart, so let me just drop that on real quick. If you don't mind me working as I go, I don't want to be doing any more edits than I need to, and I don't think I mind me doing it in front of you, so we can see what I'm showing you. All right, so the market trades down below the sell side here and into the Sunday gap opening. We trade through it all the way down to another fair value gap. Hits that there, comes back up, runs back up into the opening range, drops once more into an order block, rallies, takes a short-term high, retraces back down into another order block. Let me stretch this out a little bit so you can see a little bit better. It's not as cluttered as it now. All right, and we worked off this order block, which you'll see when we get in the 5-minute chart, gets a little bit cleaner here, and rallying up into the level I was mentioning on Twitter this morning. So I'm going to drop into a 5-minute chart. Okay, and there's a fair value gap I gave you live. Beautiful delivery. Look at the low on this candle right here. We're going to look at this value right here. 39.26 and 3/4. This candle trades right back up to what value? The high now on this candle. 39.26 and 3/4. Folks, that is absolutely perfect. That's perfect price delivery. Okay. I know I'm kind of known for the Forex market showing things like that to the pip, that type of stuff. It originated really with index futures, bonds and index futures. So in the 90s, I was utilizing these same tools. I know it seems like it just came out of nowhere recently because I've talked about it, but these things have been under my control, my ownership, if you will, for about 3 decades. So it's nice to be able to share them, obviously, with all of you. And it's very, well, I guess the word is fulfilling to show it to you, that walk you through it live so you can see what it is, what it looks like. And yes, I have a lot of people asking me, why don't I give trade signals? Can I run a trade signal room? Please, I will pay you. Can you do this and can you do that? No, I'm not going to do that. Okay. I don't want to be in another paid service type thing. Okay. I'm sick of it. I don't want to deal with that anymore. I can make all the money I ever need trading. And to be honest with you, I don't really do anything anymore anyway. I'm padded out. So just enjoy the fact that I'm wanting to teach. I love teaching. I love sharing with you. And I know it's helping a lot of you. So just let that be the economy between us. Okay. I like doing it. You like receiving it. It doesn't cost you anything. So there you go. So when we hit this fair value gap, it broke lower and then once more returned back up into it. Well, not into the fair value gap, up into that range here, and then broke. And I gave you a small little imbalance, and we'll look at in a moment. We trade down into the Sunday gap. I mentioned the lower end would be this time the level watch. And so if we went down below it, come back up, it'll act as what? Resistance. It does so here. We'll look at it in lower time frame. Drops lower, once more hits the old fair value gap I showed you before we dropped into the 5 minute. A little bit of consolidation ahead of lunch. Typical retracement during the lunch hour, all the way back up to the opening range. Broke lower, small little broken, back to rebound, and also look what it's doing here, folks. It's going back up into that old gap opening on Sunday. Trades up into it, acts as what? Resistance. Trades lower, down into an order block. Big down candle right there. That's one over here. Hits it, starts to accumulate, rallies up, back above what level? Here, I'm going to make Sunday's levels really, really obvious. It's going to be obnoxious, actually. So I want you to see what was going on in my mind as I'm watching price. Okay, price goes above the opening gap, or gap opening rather, from Sunday, then trades back down into it. See that? Hits it, rallies, falls short of what? The relatively equal highs over here. Retraces. Where does it trade down into? That gap opening again. Now we're at the discount low. It rallies, comes back down in, fair value gap, trades into that. This is a 15-minute order block. Rallies, and what's it go to? The 39.52 and 3/4 level. Hammers it. Beautiful, 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 beautiful. In the afternoon, it became a lot better. In the morning, it was sloppy. So when I say things are sloppy, it just means that it's not really giving a whole lot to work with. I mean, you have very few options, and you have to know exactly what you're looking for, i.e., what I was giving you this morning. And this area here, watch how it should stay open, and it stays open, basically the whole thing. This is sloppy, even though it's a nice delivery. It's not giving you all of the mechanics of entry, like this one here, this one here, this one here, and then run to the objective. I was drawing your attention to today. So the morning, while yet it was still potentially profitable, and I was able to call it for you live, that really wasn't my choice session, because it was just, I didn't have a real clear view on what I wanted to see. This morning, one of the followers on my Twitter feed, a lady asked, why was I talking about 39.53 level? I rounded it up 1/4 point above this level, and the high comes in at 39.54.5, so off by 1.5 points, so handles. So I was more interested in the run to that level versus just going down to the Sunday gap opening or the old London open lows. There are trades there, obviously, and I can see them coming. It's not a matter of missing them, so I don't know that they're there or forming. My interest really lies with what is the setup that I'm liking the most? Like, what is it I'm looking for specifically? And the level I gave you, that 39.53 level, I want to see a run up into that. So we had to come down below and then back above Sunday's gap opening, and then it treats it as a dynamic support and resistance level. Did you just hear ICT? That's blasphemy. He just talked retail. That's a cuss word around here. Well, I'm talking about it in a way where you'll understand. And the level I gave you, that 39.53 level, I want to see a run up into that. So we had to come down below and then back above Sunday's gap opening, and then it treats it as a dynamic support and resistance level. Did you just hear ICT? That's blasphemy. He just talked retail. That's a cuss word around here. Well, I'm talking about it in a way where you'll understand it. So the opening gap on Sunday, if you put it in your charts and just plot it across the entire week, you'll see that many times there's a lot of valuation around that gap. So it'll be treated as a dynamic price level. If it's above it, look for it to act as support. If it's below it, look for it to act as resistance. And if you can find a swing high, for instance, we have these here. We trade down. Okay? Understand it. So the opening support and resistance level. Did you just hear ICT? That's blasphemy. He just talked retail. That's a cuss word around here. Well, I'm talking about it in a way where you'll understand it. So the opening gap on Sunday, if you put it in your charts and just plot it across the entire week, you'll see that many times there's a lot of valuation around that gap. So it'll be treated as a dynamic price level. If it's above it, look for it to act as support. If it's below it, look for it to act as resistance. And if you can find a swing high, for instance, we have these here. We trade down. Okay? If it's going to trade down into the Sunday gap opening, look for it to run above here. There you go. You don't need to have this level that I'm pointing out. This is enough relative equal highs. And relative equal highs are here. So I've taught you how to find those buy-side liquidity pools. But I taught you today with this lesson using that Sunday gap opening and just extending it through the entire week. Sometimes the week will just run away from it and won't really come back to it. But in weeks where there's consolidation, like FOMC, we had that to deal with for this calendar week, and those types of events create these choppy range-bound markets that don't give you the real clean takeoff one-way directional move. You have to know how to trade in these environments. Okay, so obviously my tools do very well in this environment too. But let's go down into 4-minute chart. Actually, let's go into 3. And now let's go down to 2-minute. There it is. I forgot what time frame I was looking at. Good grief. All right, so we drop down to a lower time frame. Here's the 2-minute. You can see we have a fair value gap here. I mentioned how I didn't want to see it come back up into that once we moved away. Go back and watch the live stream recording that's on YouTube. Unedited. It's exactly as it was done at the time. You can see I was fumbling around. Had no idea what I'm doing. Before I get any further in this lesson and lecture, understand this. I am not buttering you all up to do these a lot. I don't want to do them a lot. They take a lot of my time. They distract me from my own trading and my own personal life. So I understand that doesn't make you feel good because you've had a good time today and maybe you learned something yesterday too with the other live session. But I showed you what it looks like. I showed you how you go into the marketplace and you read it. And I'm going to leave it up to you, the viewers, to decide whether or not if these things work. Okay? You don't need me holding your hand. The worst thing I could do is sit down with you just a few times a week or even once a week. That would create such a codependency on me that it would not help you. And to be quite honest with you, I knew as soon as I did this, I would get complaints and emails and things. We need you to help us take live trades. We want you to do that. You're being selfish. You're being ignorant. You are, self-centered because you won't tell us when to get in, when to get. Folks, I didn't do this for that type of feedback. Okay, I only promised I would show you that I could show you the things before it happens, that we can see what it looks like. And there's nothing that's required, to trick anybody. I mean, either it's going to work or it's not going to work. But you have to be in front of the charts doing these types of things. And failing is part of that. That's how you learn. These are opportunities to grow from that. So anyway, I think that is it. I want to go back up to the 15-minute time frame and talk a little bit about this area up here. That gap, I think that is where we're going to be drawn up into, because this is, in my opinion, not going to be left open. Okay, so they're going to want to trade back up into that. There's missing data here. Okay, there's an actual gap. So it'll want to draw up into that. And to what price level? I'd like the low on that candle. Okay, so if it was going to be a perfect delivery, we'd go right to that candle's low. But I'm not expecting perfect. I'm not suggesting that at all. But if we go above this area, that means we're probably going to go into a deeper run on the daily. And let me take everything off here. So we're likely to run this high here and we go into a block there. So the low at 4,000. So that's something to consider and watch going forward for the rest of the week. I may be wrong. It's just something for you to go into your charts and start studying and looking for. I think I have one bit of business. Let's go back into. Let's go into a 5-minute chart. All right. I was watching Hannah on her YouTube channel, and I don't know exactly offhand what market it was. I want to say it was Australian dollar, US Canadian dollar, but it was a forex pair. I don't need to have that on the chart to explain what I saw her doing. And some of my students, when they first come in to the fold, they do this type of thing too. They will look at a range like this, like here to here, and they'll measure that range, low to high, to find the 50% level, and then use that over here for a discount. That's not how we do it. Okay. If we are looking for a short, in Hannah's example, she was looking for a short, you want to look at the price leg that drops, and this is going to be the reverse of that. Okay, so this might be a little confusing, but just reverse the logic, and you'll understand. I'm sure Hannah will follow along. So from the low here up to this high here, if we're looking for a long to get above these relative equal highs, or use that 39.53 level I was calling for, or making reference to this morning, this low up to this high, this is what you'd be doing. Okay, so if you're looking for it to go higher, you're going to need to draw your fib from a low up to a high. That dealing range from that low to that high, we're waiting for an anticipated retracement. So the retracement's going down to and below 50%. Now this becomes what? A discount. So you can be hunting along at this level or less. If we're into a fair value gap, that's good. Okay. Now the same thing is done here. We're looking because it has not taken this out here yet, just fell short of it. So if we take the fib and just anchor it to the high and run it to here, you can see here's 50% of this dealing range low, this dealing range high, and it drops down to a discount. Okay. You're looking at expansion swings, okay, or impulsive price swings in the direction you're trying to trade. You don't want to use a price leg from high to low, measuring something that you're trying to go long on. But you don't want that. You want to be using the impulsive price swings that go in the direction you're trading. Then it retraces down in below 50% or add it into a fair value gap. Then you can probe that as a long and it rounds up. So I just want to kind of clarify that. I wasn't sure if she was aware of what she was doing, but if she wasn't aware, then now she knows. So that way, all of you had the benefit of learning through her interactive study, which I'm absolutely loving. I'm loving it. I wish more of you would do it. And as long as I had time to sit down, usually it's on the weekends, I get a chance to catch up to stuff like that. But I'm loving the Thailand vibe. I'm loving the the boo-boo kits and not so much the food poisoning. Ugh, sorry for that. But hopefully this has been insightful to you, Hannah. Hopefully everyone else has got something from this as well. And I'm sure I'll be back again, Lord willing, on Thursday. Until then, be safe.
I was doing that. Like, I think I did do it. So instead of what we was doing before, oh, it's not in the range. Instead of what we were doing before, it'll be from like here. Game changer. Thank you, Hannah. From here to here. This dealing range.
All right, folks, welcome back. So, Lord willing, after the holiday weekend, I'll be back next Tuesday. So here we have the evening S&P daily chart, and you can see we had a nice delivery to the upside. Initial draw was inside this area in here, up into the bearish order block. Now notice we traded up into this up close candle with today's range. Didn't quite check out this high, and I think that's the next area to look for. But in here, when we're looking at a candle that we're using for the order block, the low, the open, in the middle of the range, those are the three sensitive areas that you're watching for. If the market trades up into the middle point of that candle, this is what I call the mean threshold. Mean threshold was taken today, and that to me bodes well for a continuation to take out this short-term high. So if you take your fib and you run across this candle to 50% level, right here's the 15-minute time frame. Here's just base trading. Trade up into that small little area down here, that low. I mentioned that was going to be a likely candidate for upside relative equal highs as well. We trade back down into a fair value gap. Optimal trade entry. Rallies up, takes out Positive liquidity above the short-term high back here, which I don't unfortunately have in my chart, but you can see that when you're on 15-minute time frame. And then we consolidated ahead of today, and then during the crossover into New York midnight, has a small little jitter swing where it drops down, creates a low of the day, rallies, leaves relative equal highs in here, and this high intact. It drops down, rises once more, small little retracement, and then it does a shallow run above 4,000 on this past area here. In this small little area on the lower time frame, I used this little retracement to highlight a run to 4,000. I gave you guys 4,000 was my objective. It hit it, and then we pressed deeper into the order block on the daily chart, which creates this whole run here. Now I'm going to go into the details about that here, but for now, just know that we were trading up to this level, failed to go to that same level, consolidated right below that daily bearish order block. That's the low of the candle that creates that daily bearish order block, and then the opening when it comes a little bit higher, I think it's 4,002, but don't hold me to it, look at your own chart. So we have a small little pass above 4,000, retraces back down in. We'll look at the lower time frames and all of this price action now. Into the 5-minute candle. This run here to here. This price leg is part of this price leg. Okay. Notice how this candle's high to this candle's low. That range, okay, that range right there has one single pass, whereas this one has 1, 2. Notice that low, high, small retracement, and then a second level running. Because it had 2 stages to this delivery, I want to use this most recent one, and this is my dealing range. The short-term low, the short-term high. I run a fib on that, and I showed this in a short little video I posted on my Twitter. By the way, the Twitter handle is I am the ICT. Okay, so it's at symbol capital I underscore AM underscore THE underscore ICT. Okay, so a lot of people here pretend to be me, and maybe they're just, you know, I don't know if it's fanfare or what it is, but some of them have been asking for money. I'm not asking you for money. I'm never going to ask you to DM me. I'm never going to DM you. Okay, so if it ain't being posted publicly on Twitter, it isn't me. Okay, so this dealing range here, I measured the low to the high, 50% is equilibrium. I want to see it drop down into discount. This small little area down here, fair value gap. We want to look at that on a lower time frame. So from this run here to here, I know some of you are going to ask, and some of them were bringing it up today on Twitter. What about the times you said for the model? Teaching you something that is outside the model as the reasons why you're not going to anticipate or see that typical setup. That's the whole point of why I did it today. Plus, I have a lot of personal things I take care of in administrative work in my private group. So with that said, market rallies in here, drops down in, with a fair value gap there, once more above the 4,000 level, and then going into, here's A30 by the way, this is A3 candle, and you can watch when it trades right into that fair value gap. It rises again, drops back down in, and at 9:30, this candle here explodes to the upside, takes off, and starts digging deeper into that. All right, so we trade up into almost the 4,074 level, looks like almost. So we're looking for a continuation to the upside. 4,095, 4,100 is next consideration. I want to take you into the price action down here and give you more details as to why I was wanting to take something a little bit earlier today. Okay, if you plot the NASDAQ June contract for 2022, and on the compare chart on TradingView, if you go up into your TradingView platform, you'll see a little plus symbol up here. If you click on that, it'll give you an opportunity to add another instrument. And you add this symbol here, NQM2022, and it'll plot a line chart, but it's usually going to be applied on the close. That's like a default. You want to change that in the settings by just right-clicking over here, or highlight or top it, and it'll give you a little gear or something. Click on that, change settings to, and just change it to plotting on the low, because you're comparing lows. As you can see, the NASDAQ went lower here, whereas the S&P failed to go lower. That's an SMT divergence, okay? SMT, smart money technique. It's accumulating in here, whereas the NASDAQ is taking liquidity out. So it's a cracking correlation between the two. Usually they move in tandem, but at certain times, what times? 8:30, 9:30, at news events being released, okay? They'll create this divergence. And if you have a bias, it's helpful. But if you don't know where it's going, you're going to many times encounter what would look like SMT divergence, and then it disappears as they start moving in concert with one another. So you have to be careful with that. That's why I'm teaching. That's why I always teach. Know what it's reaching for. Okay, the bias has been bullish. And for my framework, for my setup, because I gave you 4,000 and I had very little time to work with anything this morning, I just hurried up, saw the chart. I missed the actual ideal entry. I just used a close proximity entry with an order block, and there you go. So if you look at the relationship of that fair value gap, dropping back down in higher low than that of 8:30 versus the lower low made in the NASDAQ, this is a stop out. This is accumulation of longs. This is going to be the telltale sign that it's going to go higher. If you look at what we did on 8:30, it already snapped down into this gap, and it's not likely to go lower than that. There's no need to. Okay, so it's being compressed, basically like a spring or like a bomb, really. I hate to say it, so crude, but that's what it is. It's like waiting, and then all of a sudden it explodes. It's waiting just below that daily bearish order block, and it's digging up into that thing, that range on that up close candle daily chart. So it's climbing up, and we watch to see if it gets to the main threshold, which is half of that bearish order block, or up close candle daily chart. I'll make a reference to it in the video. All right, so again we can see zoomed in, price breaks back down into the fair value gap after trading to the order block here. This is a 15-minute time frame order block, by the way, and then it rallies. Inside this little area in here, there's one small little pull back into a fair value on 1 minute chart. I'll leave that for you to go into and study. And here is the hourly chart. I'm going to kind of give you like a market structure perspective. Here's where it's likely to be drawn to next. All of this movement down here, we completely rebalanced all that. Here's the fair value gap I had drawn on the lower time frame chart just a moment ago before we move back up to an hour chart. We have consolidated here ahead of running all the way up into this area here. So notice what's happening. We had a low, retrace down into this low to high, discount, fair value gap, rallies. Dealing range low, dealing range high, retraces down into, discount, rallies. Dealing range low, dealing range high, discount, fair value gap, order block, rally. Consolidate. We rally, come back down into the smaller time frame, fair value gap, SMT divergence, and rallies, and keeps pressing higher and higher. So my question to you is, how many of you first didn't listen to me when I said don't trade? 2, did you try to sell short? Why? The bias has been bullish. It's likely to do what? Keep digging higher. We try not to pick tops. And look what this has done. We've had a low, a lower low, a sudden dramatic low that we came back up, had a shift in market structure here. Then we retreat back down to this imbalance. So we're seeing market do what? Keep going higher, picking up discount levels. Each time the algorithm is picking up more accumulated longs. to press deeper into all of this range and likely trade into the buy side liquidity here. So you have to know what you're looking for, narrative and bias. Also, what in this area or over here would constitute a short? Because we have all this range in here that it's not likely to go up and go straight all the way through all this stuff. That's a high resistance liquidity run. Not that it can't happen, but it's likely to not form or pan out because we had so many supporting ideas in here. Down closed candles are supporting price. It's just finding underlying order flow that is bullish. So it's likely to go up just to keep going higher, not go up to go down. Because to go up to go down, we have all of these ranges that we would have to pierce and break through, and that requires a lot of, well, intent, not selling pressure. Okay, and the intent is to send this thing higher on the daily chart, which is why I took your attention to that initial gap on the daily chart. So if you find this one insightful, and hopefully you learned why today the range expansion took place, why was it not a short? We've been bullish, we've been looking for price to go higher, and just for clarity, let me go back up. 4,000 was my objective only because I mentioned 4,000 during the commentaries this week. So when I was talking to you in lectures, I called this level. So I wanted to give you a point of entry and then target hitting it. And that was the whole point of me showing you a little vignette on Twitter today, showing you that a level I was looking for, how to frame a trade, how to set it up, and engage it. Because it was setting up this trade here, take this for your notes. Because it gave a nice run here earlier, before 7 o'clock in the morning, that means we're probably going to have a deep retracement and look for an ideal scenario like we outlined with the SMT divergence. So SMT usually will occur around a 9:30 time period when there has already been a nice early run before 7 o'clock or at 7 o'clock. So we got real close to 7 o'clock here, but I'm not limited to this model. And some of you were questioning, with kind of like pointed remarks on Twitter. Well, what are we doing here? Why are we not using the time frame that's used for the model? I'm showing you again just proof that these things deliver as I teach them. Now, I have not only taught what I've revealed on YouTube. I have lots of students. I have students in my pay group. I have casual people that come through and watch one video or two videos, and I want them to see things that's being taught from my library of concepts. So if I can see this set up early in the day before the 7 o'clock in the morning, to me it gives me insight. It gives me an expectation around what the 9:30 opening is going to be like. So if I get an early run like this, my first thought is I need to go to SMT later on 9:30 because it's probably going to require some kind of a Kraken correlation to set up the next leg if it's going to have one. Okay, it's Thursday. Tomorrow's Friday. We're going to go into a holiday weekend. I will not be trading tomorrow. I will not be trading on Monday. I'm going to be doing one video for my private group tomorrow, and it's probably going to be an early video, not so much a commentary for price action because it's a weekend and Memorial Day is on Monday, so volume's probably going to be light on Friday. So if you're going to be trading, study in the morning session, leave the afternoon to the gamblers. Volume just probably won't be on your side in the afternoon. Everybody's going to be going away for a long weekend. And don't trade on Monday. Take a day off. Enjoy it. Have hot dogs, hamburgers. Relax. Do what you got to do to be a family person. I'm going to be doing the same. And until I talk to you, Lord willing, next Tuesday. Enjoy your weekend and your holiday. Be safe. All right, folks, welcome back. The continuing ICT 2022 free mentorship on YouTube. And I'm taking you into the E-mini S&P futures contract for June 2022. And I saw questions in previous videos where they're asking about June, and we're in the month of May. These contracts are delivered by contract month, so we're about to, a couple weeks end trading a June contract, and we'll roll over into September 2022 contract. But we have a couple weeks still trading June. Toss that in there for no extra charge. All right, so hourly chart. Obviously, we are looking at a swing low here to swing high, getting our range. Here's equilibrium. So the market did in fact drop down into a discount and a fair value gap. So we have a market that is in what? An oversold condition. Do we need an indicator to plot that or determine that? Nope, absolutely not. The rectangles are just to draw special attention for you, the viewer. The fib is just to highlight exactly where equilibrium is. Anything above that level would be considered premium, anything below it, discount. So we move from this high down into a fair value gap and below equilibrium, so we're in a discount. All right, here's the 5-minute chart. And notice that we had this run up in here. I mentioned in Twitter, and again, my Twitter feed is not a signal service, so that way we understand one another. But I was highlighting the idea that this was likely to go higher, and it needed to go for a premium relative to this high and that low. So we moved up into a premium, and then we slid aggressively, taking out relative equal lows. So below this low here, and here is what? Sell side liquidity. It was quick to do that right at the opening at 9:30. Short little bounce, then one more time below the low here, taking out sell side. For anyone that wanted to capture along here, they knocked them out. We got shift in market structure, and then roll up even higher, rebalancing all of this. Drop back down into an area here where we have a 5-minute fair value gap. Trades down into it. I mentioned on Twitter that we would likely trade higher and take out the short-term high here. And here. So I mentioned the morning high, that's this here. That was going to be the draw on liquidity, and we saw that around here. And actually went a little higher than I thought it would for the morning. Ultimately up into a fair value gap here for a really, really deep premium from low to high. Trade up into that and then pull back inside the range between this low and high. So on a 1-minute chart, we're zoomed in here, and you can see in the morning I did a small trade here. I recorded this and did a small little vignette, shared it on Twitter. Took the partials here at the time of posting the tweet, and then the limit order getting hit here. Then the only other trade I had today was waiting for it to drop down to a discount. And when it did, I went long here. Had a little bit of heat here, not much. It was like 5 candles, so bearable. Stop loss was just below the swing lower here. So did it hit it? No. Did it look like it was going to? I don't know. I wasn't looking at the chart at the moment it happened. The trade here, I don't care. But it ended up coming back up, and I mentioned that we would run this high right here because we've taken out the sell stops here after running higher. So we had a shift in market structure back here earlier, and then we basically consolidated and dropped down to take out the sell stops. So anyone that was lucky enough to go long here and rode up here, the algorithm drops back down, clears the board, taking out the sell stops below here. I'm buying those sell stops. Had a little bit of heat here. We rallied, and I mentioned we would start going higher now because we cleared out the sell stops. and going over into the 1 minute chart in a little bit more detail. Here's the initial drop. Now, here's what I want to bring to your attention. We have a short-term little shift in market structure here. And I know some of you see this and you see this one here. Which one's the shift in market structure? Well, I'm playing the run up here to a premium, like I was mentioning on my Twitter feed this morning. So if this is the range I'm working within, the shift in market structure occurs here when it takes out that high, drops down into a fair value gap, which is what I bought. I didn't believe we were going to take out the lows here because we should have done it at 8:30 news. It didn't do it. So this was a deep retracement and then sent it higher to go into a premium right before 9:30 a.m. And then they sank it down. Notice there's no model entry here. That's telling. Okay, it's tipping its hand to you. Because there's no real setup, it's a rush to get down here. It's clearing out sell side liquidity, going down, rallying, suckering in longs, trying to pick the bottom, knocking those individuals out. Now they're not allowed to be long. Their stops taken. Nobody in retail usually will take a re-entry after something like that. They're afraid. It rallies up, comes down to a fair value gap, shift in market structure here, rallies, relative equal highs, drops back down in, fair value gap, order block, rallies once more, goes into the imbalance here, consolidates, bumps up just above the short-term high here, then drops one more time, clearing the liquidity out here. And you see my entry was at 41.20 on 5 contracts. And again, here is the tweet. Okay, and I'll have the link posted in the description below this video, so you can click and see it. It was time date stamps. And it's exactly as you see it here. All right, so it says sell side liquidity is taken, free to run to 41.43 and a half. That's this level here, while it's here. So continuing on, first partial, this is when I tweeted. You can see that in the timeline this morning. 3 contracts were sold at 41.39 and a quarter, and finally the final 2 were filled on an order at 41.43 and 3/4. And ultimately it wrote a little bit higher, which was fine. I was juggling a lot of administrative tasks this morning, but nonetheless, you can see all the trades are here and here. So was it a lot? No, but hopefully you guys learned something today. We have a non-farm payroll scenario this week. It's the first week of the month, transitioning from one month into another. And I typically like to have all my trading done by Wednesday. And because I've done what I've shown here today, I'm satisfied with this particular week. Now, some of you are going to be like, this is crazy. You have Wednesday still, you have Thursday still, you have Friday. You're welcome to do that, but I have to be disciplined and being consistent. How you get there is having rules and engagement. So you're welcome to practice, but I'm not trying to hunt anything more this week because frankly, it can go either direction. It can go higher or lower based on that daily chart. So because I don't have a clear, definitive objective, I'm going to sit on my hands and just be content with what I've shown you all here today. And that's going to be it for this week. I'm going to be finished.
I'm going to try to learn this differently after we finish going through all the episodes. One of the things I want to do is that if I have a question, I'm not going to wait until I get answered. I'm going to look for the answer. Obviously, there's going to be some things where I don't know I'm doing it wrong. So then when he says it, I'm noticing, oh, wait, I do that and it's wrong. Okay, I'll change it. But there's going to be things where it's like, okay, for example, the question I currently have right now is, okay, well, first of all, what should I buy? She didn't start with a daily time frame. Second of all, you are transitioning from buys and sells very easily. How do you do that when you have a bias? He may, in truth, be showing people multiple trade setups. Like some people take counter trend trades, and it's okay if you have a certain rule set to follow by it. But my thing is more so, like I'm looking at this market right here, and I can look at it from so many different angles. And so it's how do you switch so seamlessly? That makes sense. Because from this daily range to this daily range, we're in a premium. There's this order block that we've kind of traded up into. This is the midpoint would be right here. And then we traded up into again. We traded up into this order block, came right down to this discount. And again, this was an order block right here. She just touched and went back up into the midpoint of this order block. It will come back down again, right? So it's like, okay, am I now in a discount? So I'm looking for buys. Am I in a premium looking for sales? I know he says there's a multitude of things, but multitude of what? And where's the daily bias come into play here? Is that a day where you can trade either or? Because right now, well, there's nothing clean right here. was a part of the Judas swing. Oh my gosh. I probably would have been stopped out here anyway. I'm seeing this, but I'm just want to know why this works. Because it's 8. It's not even 8:30. And my question is, what makes the entry valid? Because I've seen it, but still not. Maybe I wait for this to be taken out. And Troy is high to this lower right here. I'll wait for price to come back down into this, which in theory does. So long. That makes sense, but why? At 6:30, this happened. So time is not even relevant. It's just the idea makes sense. I guess it kind of comes back down to here, but doesn't really reach it. Hmm. Look, you still get in. So I'm not describing what I'm doing, but I'm learning, just practicing some things. We have this leg over here. There is a more recent leg here too. And then we do have a valley gap here. Wire. A shop. For a deep one, be nice. So with the XY, we are in this imbalance. So I did say it could go either way. Just be looking for price to come up first. The more recent leg, you can even have a leg of from here to here. But there's no fair rally. I mean, technically there is one here, but I'm not using that. I prefer this leg right here. There's a cleaner fair rally up here. And a target. That's left. Only these. To this. Okay, so there's some daily imbalance here, which we're close to. Is also equal lows right here. In this range, we're in the discount. So we're in the premium. There's an order block here, which came up to, and it's rejecting currently. We've also been bearish. If you're kind of looking at price action, the hourly time frame, we've from this point onwards, we took out this low right here, and then like the 50-minute here. So we traded below it. It's also an imbalance from here to here. And trade taking up this low with this imbalance, go back up to it. Right there, we get an entry. And you also know that from the dealing range here to here, you're in a premium. That's a good entry. And you will set your stop loss to above the first wick right here. couple of pips, maybe like this. And you're targeting this imbalance down here. Probably taking profits along the way. This is a nice trade. It's still ongoing. The reason why I'm looking at this re-entry as an idea. We have market open. From here we rally up, take out these highs. There's a sweep of this liquidity. We then take out this low right here, which is a low. We pull back from this dealing range, from this high to this low. We have this order block right here. Price come up to it in this premium. Since stop loss, continuing this whole idea of trending to the imbalances down here. On the daily, it wasn't clear when I was looking at it. There's not really much. Like, there's no equal highs, there's no equal lows. Like, it's a bit whatever. So that really gave us a bit of help on that direction side of things. Is it right? Maybe, maybe not. We'll see. When you trade into this halfway point, it does few ideas that you can go to buy side liquidity, but I just feel like we haven't really reached a target. XY is also bullish up until this. To be fair, it's got to the midpoint already. But this imbalance anyway. The idea of kind of the gap. This is shouldn't be to the wick, it should be to the open. If you can actually put it to the wick, because we opened here, went up, came down. I didn't really fully, but we came to this hard midpoint, so there could be a rejection from here. Kind of an issue for buys or sells, sorry. But there's also not really any buying opportunity from my point of view. It's just mainly tape reading. We're going to leave that there for now. We're on episode 37. We're definitely going to be watching this off stream and kind of going back and we're definitely going to have to go back basically. But yeah, we're just improving gradually, including things we're learning. And I was mainly inputting the better place to look for the thing called the Fibonacci, because I was using the whole portion of a move when I can just look at the leg of a move and break it down into a bit more clinical entries. And that's it for today. It was an hour and a half. We did some study, we did some entry, we did some fix. So we entered trades, gave analysis, we then rectified it. We came out early because it was wrong. Then we went to study, we did study, we then learned something new, implemented it into the markets, and we learned some other things. We didn't write down today though. That's the only thing I didn't like, but we'll get onto that another time. I'm just tired and have more writing to do even now. So I'm gonna see how this trade does. We'll then recoup and then we just restudy every time. We just keep going day by day. We'll see you guys soon. I'm gonna go back to work. Peace.